It's Barron, Shannon from alphatrends.net. Today's Friday, the 15th of May, 2020, and we had kind of a mixed market here this week. The biotechs, which have been the strongest this year, added to their gains, and the financials are kind of interesting here. They were down a little bit today, and they're at an important level, so let's just get to the charts. First, we'll look at the S&P 500. We're kind of in this range. We did break below an important level of support, but then quickly got back above it. So that was the good news this week, that we broke this support and then came down to the volume weighted average price from the beginning of April. It touched almost to the penny on that level, and now we're up to the pretty much the 5-day moving average, which is declining, and that still tells us we need to be cautious going into next week. The declining 5-day moving average and month-to-date volume-weighted average price are right up in this area. So going into next week, like I said, we're in a range, but very cautious overall. The 20-day moving average is starting to roll over. The 50-day moving average is still declining, but we're in a range, and the NASDAQ still has a pattern on this daily time frame of higher highs and higher lows. So you simply can't look at this and find a reason to be bearish on the daily time frame. And even when you get to the 30-minute time frame, we came down to an important volume weighted average price level. That is from this gap right here. It had been prior important, and again it did this week. So there is a lot of strength still in this market in terms of the higher highs and higher lows from the NASDAQ. The Russell 2000 continues to be the worst. It did get back above this little, or right into what's been the most important area recently as far as support and resistance, and we're right up against the declining 5-day moving average. The most interesting thing here is we came down and touched the volume weighted average price from the March low. So if we see that this coming week we do fail and do something like this, that's going to be very negative for the Russell 2000. My opinion is you just leave the Russell alone. Semiconductors are in this range that we've been talking about a little bit, still holding the 200-day moving average, but when you look at that 30-minute time frame, again, it's just kind of a volatile mess. The more important level of band of support did hold in here, 126.5 to 128, and again, I think we're just digesting these gains, really. The biotechs have been the leaders, and they continue to be. They broke beyond the range that we've been talking about. That did hold as support, and now this market is, again, within striking distance of all-time highs, which it did hit this week, by the way. I mean, we did break beyond the highs that were made in 2015. So, again, a very healthy group. The weakest group remains the financials. The financials did break their important support level. They're below declining 20 and 50-day moving average. They just act terrible. As I was telling subscribers today, that I think that basically getting below 2075-ish is where it makes sense to get short at this point. We're stuck below the volume weighted average price. That's this green one from the March low. This prior band of support looks like it's holding as resistance with a declining 5-day moving average. So if we break below this 2075 level, I think it makes sense to be short with a stop up basically around 2150. Listen, that's it for me. I'm on vacation for a couple days, so it's brief. Enjoy your weekend, and talk to you next week.